Hey everyone, welcome back to Corporate Decoder, the place where we untangle those complicated company reports. Today we're diving into Datadog's latest proxy statement. No, it's not about cute puppies, it's a company report and it's surprisingly juicy. Think of this proxy statement as Datadog's annual shareholder meeting playbook. We're talking director elections, executive pay, and a few important company changes they want you, the shareholder, to vote on. It's all happening June 3, 2020, 2020, 2025. First up, the election. 3 Class 3 directors are up for re-election. T.T. Cole, Matthew Jacobson, and Julie Richardson. If elected, they'll serve until 2028. The board is basically saying, hey, do you like these people? Should we keep them around? Next, a non-binding advisory vote on executive compensation. This is where you as a shareholder get to say whether you think the top dogs are being paid fairly. It's like a thumbs up or thumbs down, but the board doesn't have to listen. It's more of a we'd like your opinion kind of thing. They are also asking to ratify Deloitte and Touche as their independent accounting firm. It is like saying, do you trust the guys checking the books? Finally, they want to approve an amendment to their company charter to protect officers from certain lawsuits. This is a bit more complex. Let's get into that. Let's talk about the people running the show. The board of directors needs to have a majority of independent members, meaning they aren't too cozy with the company's management. Datadog says 6 of their directors are independent: Ms. Cole, Ms. Richardson, and Messrs. Callahan, Etcheria, Jacobson, and Shah. Basically, these people can make unbiased decisions. The board also keeps an eye on risk management. They have committees for audit, compensation, and corporate governance, each looking out for different kinds of potential problems. The audit committee, for example, monitors financial risks and cybersecurity threats. It's like having different departments watching out for different dangers. The audit committee basically gave the financial statements a thumbs up. They said they reviewed everything with management and the auditors and recommended that the board include the financials in the annual report. Here's a quick note. No one on the compensation committee is also an officer or employee of Datadog. They also don't have any weird connections where one of Datadog's executives sits on the compensation committee of another company where that company's executive sits on Datadog's compensation committee. It's all about avoiding conflicts of interest. Let's move on to the executive pay. Datadog's goal is to attract and keep talented executives. They do this with a mix of base salary, bonuses, and stock options. The idea is to reward executives for both short-term achievements and long-term company growth. In 2024, the compensation committee bumped up the base salaries of the executives to be more in line with similar companies. People like Olivier Pamal, David Opsler, and Alexis Lacour each got a salary of $425,000. Executives also have a chance to earn a bonus based on company performance. The target bonus for the top executives was set at just under what they earned for the year. All bonuses were based on how well the company did at getting new annual recurring revenue with certain targets with deceleration, based on operating income. This is like saying if the company has a good year, you get a bigger paycheck. Stock awards are a big deal too. These are meant to reward executives for the long haul and align their interests with those of shareholders. In 2024, executives got a mix of restricted stock units and performance-based stock units. This means part of their stock vests over time and part depends on the company hitting certain goals. Okay, let's talk about the CEO pay ratio, something that's always interesting. In 2024, Datadog CEO made 98 times the median employee's salary. Basically, for every dollar earned by the typical Datadog employee, the CEO made 98 times. The company is asking for the shareholders to allow Deloitte and Touche as their independent registered public accounting firm. In 2024, the company paid that accounting firm $2,675,000. Lastly, there's the amendment to the company charter. They want to protect their officers from personal liability in certain lawsuits, which is something allowed by Delaware law. This section tells us who owns the most stock. Vanguard owns about 8.5% of Class A shares, while BlackRock owns about 6.1%. Interestingly, most of the Class B shares, which have more voting power, are held by the CEO and Chief Technology Officer. It is important to see who makes the decision for the company since they are not all equal votes. Datadog also has a policy to prevent conflicts of interest with related parties. Any transaction with an executive, director, or major shareholder has to be approved by the board or audit committee. It's like having a chaperone to make sure everyone plays fair. Now let's step back and look at the big picture. Datadog is a growing company in the cloud monitoring space. They are hiring new executives, their old executives are getting paid well, and they are doing things to prevent conflicts of interest. One weakness though is that many shares are held by their executives, and that means they control the decisions. One big risk is a Class B share executive suddenly deciding to sell their stock. Overall, Datadog looks like a well-managed company in a growing industry, but you can decide that yourself. That's it for this corporate decoder. If you found this helpful, please subscribe, like, and comment below with your thoughts on Datadog. What do you think of that CEO to worker pay ratio? Let's discuss.